What's up, my friends, ladies and gentlemen? Jimmy here. This is a really crazy day. This today was a bloodbath. Let me share my screen quickly with you guys. There's so much to share. There's so much to share. We're going to talk about loss aversion, the recency bias, the psychology about losing and winning, the fundamentals. We're going to talk about emotions because emotions are really everywhere right now. There's a lot of confusion and uncertainty. There's one thing people don't like. People don't like uncertainty. Please do me a favor. One, drop me a comment in the chat if you can hear me. Last time I had a technical issue. Secondly, say to me hello in the chat. I'm doing this live stream for you. So show me some love. I really appreciate love. You give me love, I'm going to give you love back. And there's something else. There's something else. I'm going to come with a surprise, with a gift, a real gift for you in the middle of this live stream. This gift is for everyone who is joining this live stream right now, because you guys are going to immediately benefit from this. And also those who are going to watch this video tomorrow or next week or even next month, you can still benefit from this gift. This gift comes from me. It comes from Adrian. It comes from the entire Burpness team. Hold on 1 second. I will go right back to you after our beautiful words for our partners. See you in a few seconds.
A new era is upon us. Pulse has taken the world by storm as the leading Web3 social media. Beyond current features like casting, tipping, inscription trading, and earning, it's now elevating to the next level, on-chain.
Soil, a fully regulated, seamless link between traditional finance and the digital crypto world, offering secure returns fully backed by tangible, real-world assets.
The Credify testnet is live, so head on over to demo.credify.finance to see how you can effortlessly experiment with autonomous earning, NFT corporate bonds, Credi and X-Credi utilities, and Module X.
So guys, what we experience today is not something that we experience every day. What we experience today is a typical market shock. Let me quickly re-share my screen again. Let me know if you can see my screen. Let me share if you guys can see my screen and if you can hear me, my warriors, people here. I'm gonna assume you guys just can hear me perfectly fine. Today, what we witnessed together is a typical market shock. Not only crypto has suffered a lot, it's actually markets everywhere. They suffered a lot. In Japan, in China, everywhere, because when there is a market shock, it shocks everyone, and everyone basically suffers from it. So we can see it here on the crypto. We can see it also in the legacy market. Your Google, Nvidia, Apple, Amazon, all of them are suffering. And if you think, hey, Nvidia, it's just 7.5, well, it is one of the biggest or the biggest stock in the global world, if I'm not mistaken. Also, Google. If Google goes down 4.2%, it's suffering a lot. I mean, that money, if that would flow into crypto, we would have immediately a pump. That's how big, the legacy market actually is. We also see a big drop in the DEXI, USD. USD is losing strength against other currencies, and yen represents, if I'm not mistaken, 14.6 or 13.6% of DEXI. So it means if the yen goes up or the euro goes up significantly, it will impact the dollar immediately as well. And this is something we can see here as well. So what happened? They increased the interest rate. So what happens if a country increases the interest rate? It's the first, hike since a long time. It means that borrowing money or using money it's getting a little bit more expensive right now. And there are a lot of intermarket correlationships, and this will immediately affect the worldwide economy. The S&P also suffering a lot. It started today with a pretty significant opening gap. This displays some kind of life from the bulls, but I'm not too convinced about this. This caught my attention today. And let me go quickly to the 1 month chart. You say, okay, what the hell is Dixie? Dixie is it's a volatility index. It's actually the fear and greed index. Normally, when the Dixie or when the fix is high, it means people are hedging themselves. That's one. Secondly, when it's high, it also means the premium you pay for your options are high as well, and yet people are willing to hedge themselves. So there's a lot of uncertainty, and when there's uncertainty, people, or I would say big players, they want to hedge themselves. If you see that the fix has a low reading, for example 10, 10 is actually an annualized figure, so you need to divide this by 12 to have the 30-day implied volatility, not historical volatility, implied volatility. So 37.5, it means basically 37.5 divided by 12. That is your implied volatility for the next 30 days. This doesn't go up just by accident. This goes up because there's a lot of fear in the market. There can be many different reasons for fear. It could be crypto-wise, Grayscale selling their Ethereum, or the clients of Grayscale selling their Ethereums. As we can see here from this chart, there's a significant outflow. We don't have the figures, the numbers for this day, but there's like a 500 million plus outflow, which is pretty significant if you would ask me. I'm really curious about the Bitcoin ETFs. If we're going to see today a significant outflow or inflow, this is the biggest drop we had in this cycle, a 33% drop. And we don't know how these ETF holders will react to such a drop. Will they scale in? Will they de-risk? What will they do? Do they want to hedge themselves? We don't know yet. And there's another thing I would love to share here with you guys is this chart. This represents the inverted yield curve. And why I'm showing this? I'm showing this because bonds, there's a lot of money in treasuries. And as of today, the short-term yield is for treasuries is higher than the long-term. For example, for the 1 month, you can get a 5.3% 7 yield, and for a year 4.3, for a 2-year 3.9, for a 10-year 3.7 or 3.8 if you would round it up. So why I'm sharing this? I'm sharing this because when there's a lot of uncertainty, big institutions, they rather prefer to have their money in treasuries, in bonds, rather than risk-full assets, because you're getting a nice yield, and like the short-term yield are giving you more money. The short-term bonds give you more money than the long-term. And this is what we call an inverted yield curve. So normally you would measure this by comparing the 2-year and the 10-year. You could easily also compare the 1 month with the 1 year, or the 6 month with the 1 year or the 2 year, and we see a significant inverted yield curve. Every inverted yield curve has resulted into a recession. So you see like the gray box here, the vertical line. It means here we had an inverted yield curve, recession. Inverted yield curve, bam, recession. Inverted yield curve, bam, recession. As you can see, whenever there's an inverted yield curve, it often takes a quite long time. Sometimes it can take a few months, sometimes it can, in this case, a few years. And this inverted yield curve we've seen here, like the most recent one, let me include the 2008 as well. This was an inverted yield curve, and we experienced, I think many of us, we have experienced this this massive recession. I can recall this recession because at that time I just graduated, and even for me as a graduate, it was quite difficult to find a job here in the Netherlands. Eventually, I managed to get a job. Here, this is an inverted yield curve as well. And we had in a recession, a small recession here in 2020. This, my friends, is a inverted yield curve as well. So the likelihood of having a recession is quite high. Some people would argue, okay, this model is kind of outdated. I would say this model has been pretty accurate. So I wouldn't really ignore this. And of course, I'm not saying today we're going to end into a recession. As you guys can see here, it takes a lot of time. We started here with this inverted yield curve in March last year. It could be possible that we're going to end maybe 1 year or 6 months from now into a recession. But that's not actually the topic I want to talk about. The topic I would love to talk about is, you guys are my crypto brothers and sisters. And you guys have experienced this market shock quite heavily. And whenever there is a market shock of this magnitude, and this market shock actually reminds me to the COVID crash we had. And the funny thing is, this was also around the Bitcoin halving. Here, there was a massive uncertainty. This was a very fierce drop, a 63% drop. We haven't seen them, right? 63% drop. I mean, what would a 63% drop do now? It would really destroy a lot of altcoins, because 63% now is way more money than what 63% was back in 2020. This was a significant drop. It quickly bounced up, a beautiful V-shape recovery, halving. We had some chop here. And even here, after the halving, we had like a 21% drop. And then up we went. So we shouldn't forget that quite recently we had the halving here. We had the ETF, Ethereum ETF here, as you can see here with this arrow. When we had like the Bitcoin halving here, Bitcoin dropped. When we had the Ethereum ETF, Bitcoin dropped as well. But of course, this market shock is not because of the Ethereum ETF, but it's definitely something I do not want to fully want to ignore. So when we see this drop here, and it's a significant one, I'm not going to belittle this one. This is from the high to the low. This is a 33% drop, a 33% drop. This volume node perfectly aligns with this order block, this consolidation phase here. It was a pretty quick one, and even I was really surprised that this massive move resulted in a very short consolidation before we saw like the next leg up. Ideally, I want to see Bitcoin holding this level, reclaiming this level, and hopefully at the end of the week, today it's too early. We had a weekly close yesterday. I hope the weekly close of this week, hopefully we're gonna see a big long wick, and that would instantly change the sentiment and the bias. Another thing I would love to remind you guys of is loss aversion. When we lose money in financial markets with crypto, we're doing the blaming game. We're blaming ourselves, we are blaming others. And yes, you shouldn't blame others, because you should take the ultimate responsibility. But understand that whenever there's a market check and people are losing money, and you're one of them, and even I'm suffering as well. Not gonna lie. I mean, I have a portfolio. I'm still way better than let's say like a beginning of the year, start of the year, or last year. But still, I gave up some of my profits. They've been destroyed by the market, and that's the consequence of having a long-term portfolio. How I see it is, this is just another higher low in the make. It's just like another higher low. And I know my equity curve, they will have like many different other higher lows. This one is of a different magnitude than a quick correction. This is a severe correction. This is a market shock. Secondly, I want to remind myself, but also to remind you, whenever there is a market shock, we tend to fall into this so-called recency bias trap. What did I mean by that? We saw a massive move up from here. This is a significant move of 91% in a matter of what? In a matter of 53 days. We could easily see again a massive move of 93% again in the next 50, 60 days. I'm not telling you it will happen. However, when things are going up, recency bias kicks in. What happens then is, when price is going up, we are also upping our predictions. When price is going down, we got rejected here, we are basically downgrading our projections, meaning price going lower, we're predicting lower. That's basic human psychology. This is one psychology. This is what we call recency bias. And I'm pretty sure a lot of people, I'm not saying you should skill in now. I'm buying myself. I shared some setups with the community, with Discord community. And by the way, those who are watching, you can be part of this community as well. I'm gonna drop a link, and if you use this link, you can immediately get access to our Discord. We have here a message from our legend friend Gary. This is very true. Suffering a mark to make it loss, and being sad or scared is the same as being excited, proud or clever when benefiting from MK to MKT loss. It's paper. Nothing changed for Bitcoin. This is really true. Fundamentally, nothing changed. Psychologically, emotion-wise, a lot of things are happening right now. There's loss aversion. Whenever we're suffering from a loss, that pain that comes from losing is 3 times stronger than the pleasure of gaining. So meaning you're losing today, let's say 10K, for your feelings, for your mentally, psychologically, you need to make 30K to compensate that pain. Thanks for the clarification, Gary. Mark to market. And when loss aversion kicks in and recency bias kicks in, you're suffering. And because you're suffering, you cannot technically make good decisions free from emotions that are clouding your judgment. Fundamentally, there's nothing wrong. Technically, this is a beautiful level for Bitcoin to hold. If this holds, I'm pretty sure I'm going to scale into a lot of other altcoins. I'm already skilled into Rio, anyone. I share this with the community as well. I am not scared at all. Let's quickly check what's happening with Ethereum. And I'm not interested in Ethereum against Bitcoin. I'm only interested in Ethereum against Bitcoin. This is the weekly chart. This is what I would say a must-hold level. We might see a beautiful hammer on the week. And this is, of course, still a downtrend. We are seeing here what I would say a massive bullish divergence. I might repeat myself because this is the exact same thing what I said last week. Holding this level would be extremely good for the Ethereum ecosystem. Let's quickly go to Rio. I shared the trade setup today with the community. And again, guys, you can get these setups as well. I just shared a link in the comment, in the YouTube comment. Go to our Discord. You don't need to pay anything. Just click on the button and have fun with us. This is Rio. There are a few things what I like, and I suggest to find similar setups. What do I mean by that? Technically, Rio looks very organic. A beautiful wedge, breakout, resistance, breakout. And now we see here this massive wick tapped below this support line into this liquidity zone, and it quickly jumped, likely in 4 hours of now, it will close above this support level. I'm aiming here around $2.1 as a trade. I also added Rio to my long-term portfolio. This is something I would, I'm happy to hodl for the next 8 or 12 months, or however this how long this bull market will last. Nobody knows. And I have seen similar setups. For example, ICP, USDT. And again, if you're too emotional and you lost a lot of money, don't think, okay, I'm going to revenge trading and I'm going to make up for all the losses. No, you only should execute a trading system that aligns your system, your profile, but also a system that you have tested. And of course, we haven't, a market shock is not something you would experience every day. So ask yourself, is this technically a good level to scale into? This is ICP. I discussed this today with a few other analysts. I actually like what I'm seeing here. It wasn't able to take out July low. A lot of coins, they are actually trading below their July low. And technically, it's still above this support resistance zone. Let me quickly go to the... For me, this is a little bit too early to actually jump into a trade. But if we would close like this, I wouldn't mind to consider something like this. Decent 3R for a swing trade. Nothing wrong with that. If you are a ICP, long-term bull, then this is not a crazy level to DCA into ICP. Not saying that you should, but I would really look for charts that would, that look like this, where the weekly level hasn't been breached, where the weekly level hasn't been violated, where the weekly level is still intact, where the structure is still okay. Ladies and gentlemen, let me know, by the way, in the chat if you guys have any questions. I love questions. I love also comments. It's like the really good comment Gary shared with us. Let me know, guys. I'm really interested in Sol as well. Here, another one. Today is the first day that I'm looking into Solana. Honestly, this doesn't look bad. I mean, look, imagine this is the 30-minute chart or the 15-minute chart. Would you go long or short if you had to? I don't believe this looks really that ugly. It took the July low. And now let's do Solana versus Bitcoin. It's actually in the accumulation zone. This is not bad. I mean, if we get a close like this, and we're going to have our daily close in 4 hours and 2 minutes. Let me see how it looks like on the 12-hour. Look, normally, when I see such a chart on the, let's see, what's on the 12-hour, and you see the RSI crossing through the 30 level, going, in the so-called oversold area, and when it's about to cross again the 30 level from below, above, you see something like this, a solid support resistance zone. This is not a bad level to look for longs. I already have some Solana, so I'm not, looking here to add them to my portfolio, to be honest. Just as a trade. This is not bad as well. This is a 3.3R. Let's revisit this next week. Again, ladies and gentlemen, my friends, a market shock comes with a lot of consequences, and one of the consequences is emotions, and they gonna have an impact on your decision-making process. This is normal. If you're suffering, it's normal. If you're scared, this is normal. When you sometimes get too excited, it's normal. But eventually, these emotions will not help you. And I'm not saying here you should, control your emotions. Me as a trading psychologist, as a NLP master coach, even as a hypnotherapist, I'm telling you, trying to control these emotions is a losing battle, because you just cannot control something you cannot see, and you cannot control something that just happens, by thought alone. You cannot control your thoughts, so let alone your emotions. However, I do believe you can manage them, and you can lower the volume of these emotions. However, you need to have an edge, a technical edge, and you need to have like a strong mindset. And then you need to switch into execution. Bitcoin, what is Bitcoin doing? I would love to see a close, slightly above this, a little bit higher to this wick. So I would love to see like a close around 54. And honestly, look, if this is the 4-hour chart, would you be more bearish or bullish? Would you sell? Would you give up? If I would ask this question to myself, would I give up here? No, hell no. However, having like the premise of it's too late to sell, I believe this is a really stupid premise. This is a bad foundational belief. From a technical perspective, I don't believe that this is the time to give up, because let me remove these, these lines, these the halving as well, here halving as well. And now ask yourself, what I'm seeing here. What am I seeing here? I will tell you what you're seeing here. Range. Here, another range. this is, of course, also a range. We not gonna lie, we broke this. We broke down. However, this still can turn into a massive bear trap. And now ask yourself, what's the secular trend or the primary trend? The primary trend is, undeniable. It's still up. I mean, who can convince me that this is a bearish primary trend? This is a bullish primary trend. Yes, we're suffering. We are 33% down. But if you look back to what happened before in the previous cycle, a 33% drop is completely normal. It seemed like the draw down kept going down. I kept buying the dip. How can I avoid losing so much of my gains to too many stop losses? Not sure if I understand the question here correctly. If you're trading low time frame, especially when you use leverage, always use stop losses. The example I gave today with Rio, I bought Rio and added also some Rio to my long-term portfolio. Where is it? And I know where I'm wrong. From a trade, if I see a candle close, like a 4-hour candle close below this wick here, I know, okay, I need to get out of Rio as a trade. Not gonna hold this longer because I have a 2% risk per trade, and I need that. If I'm invalidated, I need that money. So when I get stopped, I basically sell at a loss, and that money will be used again for other trades. For long term, I just allocated amount of money, and I'm willing, to also have like a point of invalidation for that, but I'm willing to hold of this for a quite long time. And also, like, the structure wise, it's not that bad. It's really not that bad. I'm not sure if I have answered your question, Andre. If yes, let me know. If no, let me know as well, or rephrase your question. Again, ladies and gentlemen, there is a link, and I shared a link with you. This link brings you directly to the community of Adrian of CryptoBurb and his legendary team. They are there 24/7, sharing calls, sharing DeFi setups, sharing airdrop opportunities. So I would say go there, click on that link, join the community. It's 100% for free for the next 60 days. It's 100% for free. You don't need anything. You don't need a credit card. You don't even need to share your email address. Just go to the community, become a member. It doesn't cost you any cent, any penny, and have fun with us. We have here a question from Mohsin. When we are in a range, how do we know if we're dealing with accumulation or distribution? You don't know. Honestly, I would say this is locally distribution, but then macro, it's accumulation. It really depends on your thesis. My opinion, and I think this is a really good question, is this. I swear I had a different Bitcoin chart. Was it here? Okay, it doesn't matter. Especially when you see a range like this, and then a range like this, a range like this. These are long ranges, okay? This is not like your 20-day range. This is a long range. A long range here. Whenever, Martin, you see a range, you need to ask yourself the question, where does this range coming from? For example, here, in this case, this range here, Where did it started? It came actually from here, right? This range here, you could ask yourself the same question: where did it come from? It came from here, from this strong impulsive move. This range here, where did it come from? Where did it come from? It came from this point to here. So ask yourself, what's the primary trend? And then more likely than not, a rectangle or a range that comes from an uptrend often results into continuation of the primary trend. Of course, there are exceptions. It can be invalidated, just like here, but this still, however, can still turn into a massive bear trap for crypto bears. Not sure if I answered your question, Mohsin, but I would say, like, long story short, go with the primary trend if you have a long time horizon. Okay, to boil down, is this what we're experiencing today? Is this a opportunity? Is capitulation an opportunity? Is a market shock an opportunity? I would say yes, this is definitely an opportunity. This is, for me, not the first market shock. I have experienced many market shocks. This shock of today, of last night, really reminded me to the shock we had here in 2020. And it wasn't only, where is it? It wasn't only Bitcoin suffering. This is the markets were dropping and declining significantly. Here, 63% drop. What happened here with, by the way, let's check the correlation coefficient, the S&P against Bitcoin. Where was it? Where was it? Here, this was on the S&P. This was a market shock as well. This was the COVID market shock. Almost 10%. Yeah, February. Oh wait, here it was. Here it was. Sorry, guys. My bad. 36%. 36%. This was caused by the COVID, the so-called COVID market shock. A 36% drop. Beautiful V-shaped recovery, and up we went. Steady and slowly. Steady and slowly. Steady and slowly. All the way to the new all-time highs. This market shock really reminds me to the COVID one. What do I want to see in the charts? I definitely want to see the VIX going down. Meaning that would mean a lower implied volatility for the next 30 days. And it would suggest that there is less fear because there's less option buying. Bitcoin wise, I would love to see Bitcoin officially closing above this green zone here, and ideally above 54.2K. And then I wouldn't be surprised at all if we're gonna move towards 60K pretty soon. Again, ladies and gentlemen, it was my honor to do this live stream with you. There is a link that brings you directly to our Discord. I think there is even a message from Adrian. I would say check that message out as well. Join the Discord community. We're going to help all of you there. I do every week a trading psychology session where you guys can ask me one-on-one questions. I do chart requests as well. We help people fundamentally, technically, psychologically, from all angles. I want to thank you guys so much for joining me. Until the next time, have a blessed evening